They were the darlings of 2007. 2008 started out tough, but solar stocks had a big revival last week, starting with SunPower's gain on the heels of a positive write-up in Barron's. The move got a second stage advance from First Solar's much better than expected earnings and positive comments about growth in solar markets from Applied Materials. I recently spoke with Nick Hodge of greenchipstocks, an alternative energy newsletter which has posted annual average returns of nearly 32% in the past 3 years. Nick says the solar stocks got overvalued in 2007, but thinks the January sell-off created opportunity. As you'll see, Nick has the mindset of a trader and is definitely not peddling the same advice as big Wall Street firms.
If you want short-term gains, you have to look at these smaller companies who might not have the earnings or the P/E ratio, but they have great products coming out, and what they just need is some publicity. We're looking at companies here like Evergreen Solar, who has a great string ribbon technology and is coming out with second-generation solar cells right now. They just stopped selling the first generation, and so once word gets out of these great young companies that are using less silicon, producing thinner cells, thin film, building integrated photovoltaics, I think that's really where we need to be putting our money.
Right, and you also, you're like Hoku Scientific, which again, another name, was a huge winner 2007, and actually has held up reasonably well so far 2008, down only about 15%.
Yeah, it was up in the $14, $15 range. It's down around $9 now, but I mean, compare that to MEMC, you know. The stock's only trading at $9, and going forward in 2008, 2009, it's going to be one of the biggest silicon suppliers. So I mean, where do you want to put your money, in the $80 stock or in the $9 stock that's going to go up to that level?
Right. What do you avoid? Because I think part of the problem is this sector is growing so fast, it's hard to put a true valuation on what's fair value, quote unquote, for some of these stocks.
I try to avoid mainstream media. If you look at the news from the tickers on mainstream media, all you see is stories about SunPower and stories about First Solar, stories about SunTech Power. You really have to take a look at some of these maybe bulletin board stocks, some of these stocks that just came on the NASDAQ, and some of the stocks that aren't receiving much attention. That's how you get an edge. That's how you get a leg up on the Wall Street guys.
Interesting. That's not the investment advice people typically get, to go look at bulletin board stocks, which by definition are very, very volatile and speculative.
Maybe if you get them on the pink sheets, but you know, the bulletin boards, the Dow OBs, they have to report their earnings. You can see it's very transparent. It's not as volatile as one would have you think, I would say.
Oh, well, give me one bulletin board stock that you like here.
Sure, Open Energy, OEGY.OB. They're making thin film building integrated photovoltaics that can be used as shingles. So you're eliminating the entire solar panel. They've got major supply deals with major roofing companies in California, and of course they're starting to grow across North America.
It seems like you don't subscribe to the conventional wisdom, but what do you say about the idea that the average quote-unquote investor should be in an ETF like the PowerShares Winter Hill Clean Energy Fund or an alternative energy-based mutual fund, and there's plenty of those out there now? Sure.
PowerShares has a bunch of ETFs out. They have the Clean Energy ETF, the Progressive Energy ETF, and also the Clean Tech ETF. But if you look at the 52-week highs and lows on those stocks, there's really only a $6 discrepancy in most of them, from $22 to $28 or in that range somewhere. So if you're really looking to make money, sure, it's safe, but you're not going to make the returns like you are doing your due diligence.